14 December, Wednesday, a really must-watch video, right? Market manipulation at its all-time best before CPI data. Oh my God, we caught it live. Indeed, we caught the whole thing live when it was doing the CPI session. I'll tell you more in detail, so stay tuned and watch this session today. But once again, please understand this, do your risk assessment, and of course, thank you AIMS for the kind sponsorship. Now, CPI data, wow, the consumer price index came to 7.1. Oh my God, okay, I was looking at 7.5 to be honest, so I was wrong again. And it was very surprising because market was looking at 7.3 as consensus. And that is like a 7, for the last time was 7.7 and previously was 8.3. So the downside is quite fast indeed. And of course, it seems that inflation has really peaked, okay? This is what everybody is talking about right now. And of course, did it help the market? Of course, definitely. When the market basically get the data right, the Dow futures shot up all the way. It was at a high, it was nearly up by 900 points, okay? But incredibly, towards the end of the day, it actually fizzled out and all the gains were gone, all right? So I'll tell you more in detail later when you talk about the manipulation part. But nonetheless, right, did it help the market? Well, of course, gold price went higher because now there's a lesser chance for Federal Reserve to really need to increase interest rate at a very fast pace. So most likely, in my opinion itself, tonight it will be a 50 basis point. So let's study this again. So apparently you can see right now for food is still at a 10.6 and the all item less food and energy is a 6.0. Now it's still 3 times higher than the Federal Reserve. What they want is 2%. So basically, if you look at it right now, it was higher, right, but like about nearly 9. So now it's a 6.0. So it took about nearly 4 to 5% of interest rate hiking to come to this point. So maybe we need another 1% at least, in my opinion. But again, let's just see how it goes. And of course, shelter is still at 7.1. So overall, it's a better CPI than compared to the last one, but it's still pretty high. All right. Of course, the market is also now watching this very closely. The White House has changed its plan to refill the SPR at $70 per barrel. It was looking at 60, remember? But now it seems that they have to do it at 70 instead. Okay, so if that's going to happen, that will likely pull up the crude oil prices. And very interesting, China has already started to open up its door, its restriction, and of course now it's only opening Hong Kong border by late January. Let me share something with you guys. Now, I basically a relative in China, and they tell me this, that in China right now, okay, may not represent every province, but this particular place that my relative are, they actually allow people to go back to work even though they know that they got the COVID virus. Now, as you know that they open up, right? So a lot of people got hit. And the thing is this, they don't have like what have in Singapore, whereby when you are sick, you stay at home, right, for 3 days MC. Nope, they don't do that. In fact, if you take MC, your pay will be deducted based on daily counting. So that means that if you are feeling tired, lethargic, painful, sore throat, you still have to go to work. And of course, it will definitely spread even more people, right? So this is what's happening in China. And of course, if this is going to be doing that, within a month or so, definitely we'll see the China production will come down a little bit more. But after that, the demand for crude oil, I think, will go up. So my forecast is that by probably February to March, when everything probably has, come to the point where crude oil starts to really form a base, we can see crude oil going up to back to $100 per barrel. And of course, you can see that Xi Jinping has already went to Arab and talked to all the guys, and seemingly is to do a little bit of deal with the crude oil side, and they are actually paying with renminbi. So all this tells you that the chance of crude oil going up is seemingly very strong. And of course, our position at OXY will be pretty good, right? All right, so tonight FOMC meeting, very good chance that there will be a 50 basis point. All right. Now the Fed officials are seemingly divided. There are very dovish people who expect the crude oil, the interest rate to stay down. The pace will be slower down. While there are some hawkish is expecting to go at least 5% to even potentially 6%. So we can see from here that we from 25 to 50, then 75 in June, July 75, September 75, November 75. So this speed here itself is the fastest speed ever by a Federal Reserve chief since long time ago. So that's the reason why that market is just feeling the heat right now. Okay, so tonight I believe it's a 50 basis point, but I still think that there should be another 50 basis point in January. So I just feel that maybe Powell would just say that, and that may spook the market, because now everyone is looking at 50 plus 25. Okay, but I'm looking at 50 plus 50. So let's see what will happen from here itself. Alright, now another big problem coming in is Binance. Now Binance has temporary halt withdrawals of stablecoins in USDC as investors concern mount after the FTX collapse. Now this is not a good sign, and this is actually pretty nerve-wracking. So you can see that this the CEO, right, CZ, I'm not too sure why he changed his portrait, right? It's like, previously it's very clear face, right? Now he purposely do this. I'm not too sure what's the main reason, but just speculating. Anyway, he's saying that, okay, they're still okay, but just that, right, there was some withdrawal, and that's something important, because Celsius actually paused withdrawal, and that was before they actually collapsed. Okay, so at the moment now, right, in last 24 hours, Binance has seen a $1.6 billion of outflow from its platform. Now Binance has about 60 billion, so 1.6 billion is not that bad, but if this is going to continue for 10 days, 20 days, this is going to be really scary, right? So all this actually is because of what happened to Sam Bankman-Fried. Okay, and by the way, yesterday I made a mistake of Friedman, is Bankman-Fried. Okay, my bad. Okay, anyway, the thing is this, we all know that this is not a good sign for cryptocurrency market. But then again, Binance last month has issued that they have the approval or reserve. They have about ratio 101. That's pretty good, right? So there's enough asset to cover most of the customer deposit. So let's just see how it happens. But if you'd ask me again, I'm going to tell you up front, I still believe that this Bitcoin, right, I'm going to write it down for you, BTC, in my opinion, all right, we'll still have to, the low will be at 12,000. All right, now market is actually speculating 7,500. I'm not going to say that. I don't think it'll go there, but I think that you should see a low by 12,000. And when will that be? Probably by March 2023 next year. All right, so let's see whether will I be correct on this. All right, now Elon Musk. Again. Now apparently Elon Musk tweet that he had not paid the Twitter office rental, right, for weeks. Oh gosh, okay. So why? Because he's trying to negotiate, okay, the building cost, because probably they know that their global office, their the San Francisco headquarters, all these are very high costs. So he's trying to negotiate by not paying, okay. And this is not good, because when all this happen, it spells trouble for Tesla. So Tesla has fell by 28% since Elon Musk took over Twitter, and it seems that there will be more downside to go for Tesla if it continues like this, because Elon Musk has said he will do all his best to save that Twitter, but of course in exchange for that he may have to sell more Tesla share. Oh gosh, okay. So you can see right now, right, in comparison with other major automaker like Ford, GM, Volkswagen, all of them are doing still rather okay. But you can see that this, what you have for Rivian and this Tesla is like, oh gosh, pretty bad, right? So this is not a good sign, honestly. And the thing is this, when there's blood, there's will be sharks. Okay, apparently the sharks are now going after Tesla. Short sellers have made about $50 billion in paper profit of all some of the biggest tech stock shorts, okay, and Tesla alone, okay, likelihood that the mark-to-market profits for short sellers is as much as $11.7 billion. Wow. Now the last time we saw this was back in 2016, and then when the Chinese came in to save the day, of course Tesla share goes up. So we're just wondering, would there be another chance of this happening? Now I don't think so. I think this time around Tesla will have to go through the brunt of the problem, and if Elon Musk continue to do what he's doing right now, he likely going to drag down Tesla share. So in my opinion, likelihood this Tesla share will come down further, and my view is that it should be coming down to this particular point, which I mentioned before, 138. Okay, I'm still very, very bearish on Tesla. And yesterday you can see that I wrote there most likely will hit about 160.95, and incredibly the market really goes there, and wow, look at it. Okay, you can take a look right here. So let me just do some here. Okay, never mind. I mean, yesterday the market was so good, yet Tesla down by as much as 4%. Initially was up, it was gap up by 4%, then after it smashed down. And the volume, oh my goodness, take a look at the volume. The volume here itself is really a lot. The last time we saw a volume like this was here, and the time Tesla share was doing like this. Then after that, Tesla share collapsed, okay? So I'm not too sure, is this going to be a sign of people coming to buy, or is it a sign that there will be a lot of selling to come, and they are looking at 138? Or what do you think, guys? Tell me, okay? All right, so that is Tesla. Okay, so let's talk about the leak. Now, it's not only I spotted with my student. Apparently now Bloomberg has covered it. Okay, now the US played down the idea of a CPI leak following a pre-report trading. Okay, the BLS says that it's unaware of any early release of its data. All right, so this was mentioned in Bloomberg, and you can see that government officials say that they weren't aware of any early leaks of the closely watched inflation data. Okay, and of course, Joe Biden press secretary Karine says that, right, she's not aware of any leaks of the White House and suggests observers were reading too much into the market move. Oh, come on, man. Serious? Are you that serious? I mean, the point is this. Let me explain to you why I think there's a leak. Because you can see the main thing was just before the US inflation data, the US the Treasury yields a big drop, meaning that that means that they know that the data will be good, and for this to be done, this is all executed by the financial institution. I am pretty sure it cannot be done by any retail. So it was 60 seconds before the data, and the thing is this, right? 13,518 March 10-year futures was traded. That's a lot, and that, of course, that pushed the market down ahead of it. And the best part of this is that we actually recorded it down, okay? It's live. Let me show you now, guys, that we were doing a trade live. We're doing like a sharing session on Trade with the Boys. And for some reason, I just feel that I should just go online last night, and actually we spotted it. Now, let me go on a video right now, let you see it for yourself. This is really incredible stuff, okay? Let me explain to you right now. You can watch it. I try to make the volume higher. May not get to hear my voice, but I can just voice over it. Let's do it. Let's go. All right. So of course, if you have any bet, make sure the handphone is really on standby mode, because the market, once it starts to move, oh, there's something happening. There's something happening right now. You see that? I think there's a slip. There's a slip. Interesting. There is some movement right now. Seemingly, someone knows something. Oops! It pulls back. This is interesting. That is very interesting. Wow. Okay, guys, gonna see something that you don't get to see usually. A spike up before the CPI. Probably someone knows something. And it's spike up already. Okay, guys, you can see on my screen right now, it's actually reflecting as this is at 9:27 p.m. So it's not even 60 seconds before that. If actually the movement came in 2 to 3 minutes before the data came out, and you can see the data just spike up, the Dow just shot up, okay, by nearly 200 points. And of course, you saw the Nasdaq, you saw the DAX, everything was going up. And of course, then the yield, or you saw what happened in the yield. So you can see even the reports are not very accurate. But never mind. My point is this was what happened. And of course, just fast forward the tape. And when the CPI data comes out itself, right? So okay, we were preparing for this, and we'll push it forward a little bit. We are going to see the CPI data coming out in about another few more seconds. Okay, you're going to go for this. Okay, so when the CPI data came out, you see the market shot up. Look at it. Look at how the market shot up. Okay, and of course, look at it, the numbers is really incredible. So you can think about it. The thing is that the market spiked up just before that. The market spiked up just before the data. So this is really incredible. This speaks for itself that I believe that there was a leak. Okay, so all these are actually happening. So that's the reason why I tell you market manipulation is always there. Okay, guys, this is really crazy. So of course, but again, I want to gently remind you that not every time when they move like this, there will be a follow through. We have seen before, the spike came in, then the market just go the other way around, right? So don't just because of tonight, what you saw, and then you think, okay, next time I see this, I just jump in to buy and sell, and then that will be a killer for yourself. Okay, just take note of that. It does happen once in a while. Alright guys, hope you like this video. Alright, let's look at the market right now and see what we have to offer for you. Now let's look at the charts once again. Okay, let's go to look at the charts. Now first of all, the VIX was incredible. The VIX was up last night to the high of what I mentioned, 20 25.84. My target was 26 in the first round, and after that it pulls off quite incredibly. All right, so for the Dow Jones as the reverse it course, I'm very surprised that the VIX actually do this. So in my opinion, I think there's something very wrong with VIX, since that someone is manipulating it, and that is a real concern right now. And of course, with this happening, it tells me that there could be a very big movement coming up in the market. So traders, you need to be very careful, okay? You don't want to be caught by this. And of course, the US dollar came off definitely for sure. With the CPI data at 7.1, the dollar came off and it's now trading at 104. It went down below 104, in fact. Although I'm a buyer in dollar, but I was just saying that, okay, should be going to here, but I was wrong, so I'll stop out. But I'll wait for a while. I still think that the dollar should be able to recover a little bit, but with the consensus of no much more interest rate hiking later by next year, maybe I had to lower down my dollar positioning. But then again, if I can focus on the VIX and also other thing else. All right, so that is the dollar. This is the VIX, and let's just take a look on the rest. The 10-year yield. Well, the 10-year yield actually pulls back down, as you can see, but then if it actually firms above 3.5 level. So as long as, in my opinion, it can stay above 3.5, it's still good, because the interest rate hiking tonight, 50 basis points, is still going to come in. It's still going to have impact. Just take note, guys, you see, although the pace can reduce, but the point is that the nominal value is still going to be this figure at 4.7525. So if let's say that this is going to be like the continual cost on any business, it will affect the bottom line. So this is actually not a good sign. It's just basically boiling the frog in the boiling water. I mean, it's just killing the frog in the boiling water, and the frog doesn't realize that. Okay, that's how I see it right now. Okay, let's look at the market with the my charts here. Now, what we can see over here right now is that the Nasdaq actually yesterday opens below my KFC level, and that level is actually this 11,774, and of course it closed above it. So by right, it should be able to go back up again. Now, yesterday it's very clear that there was some. I mean, if anyone has shorted over here, this will be your stop loss. That's why the boys purposely go ahead and hit all the stop loss. So I suspect that tonight, we may be able to see the Nasdaq going back up again to somewhere around here at about 12,000. If you'd ask me that, because I believe that Jerome Powell will most likely stand to take the dovish side, just to mellow down and make everybody happy, especially now it's Christmas period. All right, I think that will likely be happening. But if let's say he says that, okay, but we still need to, continue to look at interest rate factor, and there's still continuation, then of course the market can flip pretty badly. So I believe that before the FOMC meeting, the market will go up first, okay? But later on, as we go into the FOMC meeting, there will be likely an initial upthrust. But then if Jerome Powell come in and say something different, or at least not so nice, or basically he says that there'll be more hikes coming in regardless, then the market will really pull down. So traders, kindly take note of what I've just shared, okay? All right. For the Dow Jones, it's pretty clear. The KFC point is still here at this 33,031. And ever since it broke here itself, the market has been pretty strong. And I still think that the Dow will go a bit higher now. Now the Dow, same thing. The Dow, you can see that a lot of people who are shorted around this area, all right, expecting the price to go down, which including me. All right, we were wrong, so I cut my loss. And then what happened is that the market really shoot up and break the stops here. You can see the stops are all broken. Okay, now at the moment now, I said once again, I believe that the Dow will go up. And I think it'll go up to this point here, and that will be about 34,442. Okay, I think that it will go there. All right, I'll show to you why I think it'll go there later on with my TWB chart. Okay, and just a quick one on oil. Okay, moment. Oh, sorry, not oil. Hang Seng, my bad. Oh, sorry. I think there's some data issue. Okay, never mind. I think gold. I'll show you gold first. Okay, I think there's some data issue. Okay, gold. Now, gold KFC point is really incredible. Look at it. This was gold KFC at about 1726. Okay, and the price couldn't go above it. That's why it came down, right? Then when it broke past here, oh my God, when it pulls back, look at the incredible. Look at the incredible accuracy. I miss it, honestly. I'm so sorry, guys. I missed this KFC point. It was only later when my student informed me that, oh gosh, what a miss. And look at it. Wow, look at this. This is really, really impressive. Imagine you just buy one here yourself, and now it's at 1811. That's a lot of money, almost at $90 US. Okay, cool. This is why the KFC is good. Okay. All right, let's look at the other market right now, China. Now, China is now trading above the MA200. It was above yesterday and it's going up. So I suspect that China A50 would be coming up to this point, 13,404. Okay. Watch out for this potential upthrust here. Okay. All right, let's look at the TWB indicator right now. Let me explain to you now why I think it'll go up, because there is this figure here, 34,442. This is the this is KCB level, and it was tested yesterday, so no longer a fresh chocolate bar, but it's still a KCB. So I suspect that the Dow will be moving towards 34,442 first, and then if let's say Jerome Powell basically disappoint the market, then there could be a pullback all the way back to the MLP level. So traders, take note, I have two views tonight, okay? So take note of that, because my KSI and my KRW speaks volume, and it tells me that you shouldn't be taking a long position. If you're doing that, then it should be a fast in, fast out trade, okay? So that's why today's video is very, very crucial and very important. The Nasdaq now is moving up. The KSI stays green, but the KRW is red, so there's a mixed bag here. Now, it stays above the MLP, and most likely it's going to test back the MA200 again, and that's 11,959. Okay, I think that's where the Nasdaq is actually going right now. And for the S&P 500, most likely it's going to go up to here. Now in the new BNB right now, this is a BNB RL and this is a BNB SL. So yesterday, one single day, it has hit all the three levels, including the BNB extension, the KCB on top here and here. So I suspect that tonight, or at least to now, it will be able to go up again. It may test 4065 again. Okay, I think it will go there because it's a CCRY on the day chart, and it has a blessing of the MLP and the MAs, all of them. But remember, I'm still pretty bearish with the whole US market, but just at tonight, today, before the FOMC meeting, I think the market will pull up a little bit, because this is very typical of what Jerome Powell will do, or his so-called plunge protection team, okay? All right, so that is the US market. For Hong Kong market right now, you can take a look. Hong Kong is trying to stay above the BNB RL. The RL is here, and that is somehow around this 19,749. So if the market can stay above 749, there is a chance for the market to see 20,023. Now last night we saw it, and it got resisted and pulled back. So tonight I think we'll see that again before the FOMC meeting. So 20,023. All right, of course that's the pretext that US market goes up. But overall, the market for Hang Seng is getting a little bit weak. So if let's say my forecast is true, next week or so, there could be some pullback. I think Hong Kong market may pull back down a little bit, but not now. Okay, I still think that there'll be some upside. For the Nikkei, now let's take a look. The Nikkei has pushed up already. The Nikkei is a doji directional day, hence therefore today, as long as above OP, is a buy. The first target will be 28,191. I think it's around there. KSI and KRW both are in a positive light. So once the Nikkei break 28,191, we could see going all the way to 28,343, because this is the first trading day, second trading day, third trading day. So there is a chance to see this number coming in, 28,343. Okay. All right, so that is the market. Just let you know, the Dow Jones today is also a DJDD, so which means that above OP is also a buy, but because KSI and KW are both red, so it may not end at the high. So that's the reason why I might expressing a bit of concern. If you're buying it, just take profit along the way. Yeah? That's very, very important. Now for the gold market, as I said, what a waste on the KFC, but the gold now has break above the BNB RL 1810. So I think that we should see some resistance between 1817 to 1819 level. Okay, in terms of the rest, is above MLP, above MA, so it's kind of positive. And of course, like I say, if the Jerome Powell and team says that, you know what, let us have lesser chance or lesser interest rate hiking next year, then maybe the gold may go all the way up to 1854. All right, but of course, if Jerome Powell speaks differently, then a pullback on gold will be welcome, because we're going to buy cheap. Okay. All right, so that will be gold. And silver now. Silver price is now above the BNB RL, kind of convincing, and it seems that it's going to go up to $24.86. KSI and KRW, both of them is supporting it. So silver still is a big runner over now for now. And of course, we have the crude oil. I think I missed out crude oil earlier. Apology on that. Let me just bring in the crude oil. For crude oil, as you can see, the base support was at $71 and it has recovered now. It's above pivot 2. And the upside, I think, will be here, and that will be the BNB SL at $76.84. But again, I really want it to come back down at a lower level here to buy back again. That is my personal wish. Okay. And let's look at the Ethereum and Bitcoin to wrap it up. Now, Bitcoin, let's just refresh the chart. Bitcoin has blasted up because of the weakening dollar, but then the KSI is not good. There's some selling forces, although the KCX is still blank. So again, it's a mix here. I believe that there will be some resistance now at about 17,800 to 18,000. I think that is all I can think that Bitcoin will go. So I still think that Bitcoin will likely be coming down. So even though you can see a lot of funds came out from Binance, right, but you can see Bitcoin actually goes up. So maybe we're just buying from Binance and putting back into Bitcoin itself to a hot wallet or cold wallet, just in case that the exchange go into trouble. But people prefer to buy this for protection sake. I don't know. All right, for Ethereum. This is cool. Ethereum has a break all the way to 1338, the level I mentioned yesterday. Congratulations to those who bought. But at the moment now, you can see the KSI is still red, but the KCX is no color, so it's a bit of a mix here. And I think that the Ethereum should be able to go to 1338 again later. All right, but after that, this should be a strong resistance before a potential pullback. All right. Okay, that will be all for today. Remember, I left a special code on the PowerPoint slide. You find it and then key it in. Okay, and of course, guys, this is really out front that market is really manipulated. All right, cool. This is Kel signing off. See you tomorrow. Bye bye.